From mobile money to bank transfers to electronic wallets, the way Ugandans move money is changing fast. But what does this shift really mean? Is Uganda really ready for a more digital future? How safe is it? And what is Bank of Uganda doing to make payments easier, faster, and more secure? Let's have the conversation on this episode of the BOU Connects podcast. My name is Pumla Nabachwa, and I'm your host. Hello and welcome to BOU Connects. Today, we are talking about the future of payments in Uganda. You know, the evolution of payments, the benefits of digital payments, our role as the regulator, everything, current and future innovations. Let me not spoil for you, but here to unpack this conversation for us today is Mr. Andrew Kawere. He's the Director of National Payment Systems here at Bank of Uganda. You're very welcome, Andrew.
Thank you.
And it's so good to have you on the podcast.
Yeah, I'm happy to be here.
I know this is the kingpin of knowledge when it comes to anything to do with payments, all our innovations, and it's going to show in the words that he shares with us today. And I'd like us to dive right in. So Andrew, when we speak about these big words like digital payments, what does this really mean for somebody on the street, the ordinary Ugandan, to understand? And also, if you can just take us through the journey of payments from cash and checks to the digital systems that we see in Uganda today.
Thank you, Pumla. It's a pleasure to join you on the podcast series. So, speaking of digital payments, all we're referring to is making a payment, making a funds transfer using means other than cash or similar paper instruments. You'll recall that in the past we had, of course, checks are still around. People still do sign checks. Yes. They're less popular these days, as we shall explore. But checks are one example of a payment that is not digital. You write a check, sign it, give it to somebody, they walk to a bank, cash it, or they bank it onto their account. That is one. But the other point of reflection could, for instance, be the famous traveler's checks. Those of you who are as old as I am will remember that once upon a time, when somebody was traveling out of the country, they had to buy an instrument called a traveler's check. So you go to an institution, give them cash, give them dollars or give them shillings, and then they give you a written physical instrument which you would cash on your travels, out of the country. Now, we have moved away from that era. Today, we're talking about digital payment channels. You can access your bank account without stepping into the banking hall. You can make a payment with the comfort of your phone, in your bed, in the car. Basically, you can make a payment from anywhere, irrespective of who your service provider is. In our sector, this evolution has been quite, commendable. We've started electronic payments with electronic funds transfers around 2005. Then we introduced the real-time gross settlement system. Real-time gross settlement system allows you to make a payment within about an hour at most. And beyond that, today we have, of course, the payment cards. You can pay off a website. You can pay for goods and services off a website using a digital card, payment card rather, which can be a debit card or a credit card. A debit card means that you must pre-fund your account in a bank, while on a credit card, it is essentially a borrowing. The credit card allows you to borrow up to a certain limit, and then you can pay without handling the physical cash. But I guess the most popular one is mobile money. Mobile money came here around 2009, but it has revolutionized the digital payment space, especially on the retail scene. And indeed, the numbers are quite phenomenal. If you take the year ending March, this year, for example, nearly 392 trillion was transacted in mobile money alone. Mobile money alone. Okay. And that's, you know, on the retail side. Yeah. If you reflect about the wholesale side, which is the real-time gross settlement, yes, the numbers are equally impressive. Yes. In the same period ending March 2026, 1,000 trillion shillings. Now, in dollars, that could be about 285 or 288 billion dollars was transacted on the RTGS.
What period is that?
That's in the year to March.
The year, okay.
In the 12 months ending March
2026. Okay.
Yes. So that's $280 billion transacted on the RTGS. And that's about maybe 4 times, 5 times nearly of the GDP of the country. So we are seeing increased adoption of digital payments. And this came out in the World Bank Findex report as well. Okay. The 2025 report by the World Bank noted that approximately 71% of the Ugandans, adult Ugandans, yes, had made a digital payment in the preceding 1 year. So digital payments have picked up quite significantly. Yes. Yes, there is still some use of cash, but the digital payments have picked up, and we're very proud of the fact that Ugandans are seeing value in these digital channels.
Okay. Yeah. Oh, that's really impressive. And just as you've mentioned, because I'm an economist, I know data does not lie. It's the interpretation of data that sometimes people use to fool others. But data doesn't lie, and I've seen the numbers as well. And it's very clear that electronic payments, electronic transfers now have taken a more significant, there's a rise in payment activity. Yeah. While we've also seen fall in checks or use of checks. What does that say about how Ugandans are choosing to transact today?
I think it is inevitable, really. The payment options are giving us, the digital channels are giving us a lot of convenience. They're giving us a lot of flexibility. I mentioned the example of mobile money. You can pay in the comfort of your bed. You can pay in the comfort of the car. You don't have to go to school to cash, pay cash to a school bursar or the head teacher. And that's what you can't do with a check. If I write a check, I have to pass it on to you. Yes. And that introduces certain risks. Risks of theft, the risks of loss of the instrument, and the typical fraud, as the case was with the famous travelers' checks. Okay. So, famous travelers' checks were quite prone to fraud and alteration. So are the checks. Yes. So we've seen a significant reduction in check transactions. If you go back to, say, 2017, 2018, checks accounted for about 20% of what we process in the interbank clearinghouse. That's 2017, 2018. Today, the checks account for just 6% of what we process in the clearinghouse. Yes. So this evidently means that people have migrated to the digital channels. People have appreciated the convenience, the safety, the flexibility that digital payment rails provide. And so, and these are channels such as the electronic funds transfers. Yes. These are channels such as the real-time gross settlement. Yes. And of course, the highly popular mobile money. Yeah. Okay. So today, checks in terms of value and volume account for less than 6%. Yeah. Okay. And if you extend it to some foreign currencies, like the US dollar, which we also clear here, it is even more stark, because in 2020, right now the USD clearing is about 3%. It's about 3% in terms of check.
But value. Andrew, and maybe this is going to make me seem so removed or unrelatable, but you know that in the past 5 years, the only time I have seen a check is when I see on TV institutions sponsoring and there's a dummy check.
Absolutely. Yeah.
I only see those big dummy checks where an institution is saying, we are sponsoring the Kabaka's Run, we are sponsoring cancer awareness. This is the dummy check in the past 5 years.
Yeah.
So even this 6% you talk about, I'm like, where is it?
Yeah, you're not alone in this. I haven't used my checkbook in, I don't know, about 3 years or so.
Imagine.
So the popularity of digital channels is quite evident, and checks are phasing out. In fact, in some jurisdictions, checks have been outlawed completely.
Really?
Yeah, and checks have been outlawed
anywhere
completely.
within the region, like East Africa?
East Africa, it's still about the limits. It's limits. In Kenya, limits have been capped. And of course, you're aware about our own journey.
Yes.
We've been on a downward capping journey for interbank checks.
Okay.
But in jurisdictions such as Namibia, Botswana, the UAE, checks are no longer available.
Okay. Given that we still use them, I guess probably that is speaking. That shows us, as you've said, 6% for UGX, 3% for USD. Do you think that this really is sustainable, both cash and checks in this evolving financial landscape? And maybe what is BOU, now that you're aware, in fact, of those jurisdictions that have put measures in place, some are capping, others have outlawed them completely. What is Bank of Uganda doing to modernize now the way we make payments, both the public and businesses, individuals and businesses?
So the question of sustainability, I think we can't continue using checks. It's not sustainable. It's not sustainable, just like cash itself. Cash has been around for years. It will remain around for a long time. But I think the way the world is digital. We are in a digital age. The world is heading digital, and there is no way checks are going to survive this digital transformation. If you think about cash and paper instruments broadly, they pose risk. I'm sure you've heard of people losing money. People have been robbed of their hard-earned cash. And most of the time it is the physical cash. The moment you walk out of a banking hall with a bag of cash, you naturally attract the wrong people around you. You naturally attract burglars and all sorts of bad people. So the future is digital, and besides that, by transacting digitally, you build a footprint, and that's where we encourage, especially the public out there. By transacting digitally, you are building a digital footprint. So by transacting digitally, you're giving yourself a digital trail, which digital trail can, at a point in time, be the basis of a credit decision by a lender.
Okay.
Now, the checks may not give you that in the digital age. Okay. So, is use of cash sustainable? We think cash will be around, but the digital channels are going to be increasingly popular. Look around us, Pumla. Government is promoting the Digital Uganda vision.
Yes.
We are talking about the 10-fold growth strategy, of which science innovation is a key component. And that's about digital transformation. If you think about the NDP more broadly, the digital innovations are a key component. And so the digital payment conversation is something we can't set aside, and that's where the future is. What is Bank of Uganda doing? The central bank is doing a number of things. First is to educate the public. We are urging the public to understand and use these channels. The mobile money options, bank to wallet transfers, electronic funds transfers, the real-time gross settlement systems, and all the other digital channels, payment cards, debit and credit cards. We're urging the public to embrace these channels, but also to understand the risks that come with them, because we must use these channels responsibly. So that's the first thing the central bank is doing. Now, on the side of the institutions, we are stepping up our oversight activities, particularly in light of the fast changing cyber threat landscape. So we're working with the institutions, we're working with the service providers to strengthen the cybersecurity defenses so that the systems are robust, so that the systems don't have vulnerabilities that the bad people exploit. But beyond that, the central bank is also exploring new policy measures.
Okay.
The first one is to further reduce the interbank check limits. This is a journey that started in 2017, 2018. We capped initially the interbank checks at 20 million shillings. Then later on, having seen the trends, having observed the trends, and of course in response to the increased adoption of digital channels, these limits were capped further in 2022.
Yeah.
And very soon, we're going to reduce those limits again.
Okay.
We're reducing those limits again. In Uganda shillings, for example, the interbank checks will be capped at 5 million shillings.
Oh.
In dollars, that will be at about $1,375. In pounds, it will be capped at 1,100 pounds.
That's
and
not
in euro,
much.
it's not much indeed. And in euro, it will be 1,125. But this is in response to what we see in the market.
That trend, what
Absolutely.
the market is showing
Exactly.
us. Okay.
I mentioned, for instance, that
understand
it's only 6%.
Yes.
And for foreign currency, it's just about 3%.
Yes.
So we are reducing those limits further and expect that the public will continue migrating to these digital payment channels.
Okay.
That is one. The second key policy measure that the central bank is introducing is a capping of over-the-counter cash withdrawals. We've looked at numbers, we've looked at statistics, and we've seen that very few people withdraw sizable amounts of money. In cash over the counter.
Yes.
The numbers, for instance, if you look at transactions between January and, say, August or September last year, it's only about 9% of the withdrawals that have taken out more than 20 million shillings.
Okay. And this is over the counter,
over the
not
counter.
ATM. This is over the counter alone.
Yes, okay, you can, but by extension, you could say it extends to the ATM as well. Yeah. So it's about 9% of people who have withdrawn more than 20 million shillings, even though in terms of value, it is about 60% of what has been withdrawn is above 20 million shillings. So having looked at the increased popularity of the digital channels, having looked at the convenience that comes with these channels and the overwhelming public adoption of these digital payments and digital transfers, the central bank is exploring capping those checks, both at individual level and at corporate level. At individual level, you'll probably withdraw maybe 50 million in a day, maximum. In a week, that would be about 250 million. While for the corporates or business accounts, it will be 500 million per day and 2.5 billion over a week. But of course, this is only on the cash component. The other digital channels remain open with no limits. You can still send as much as you can or as much as you wish via the real-time gross settlement system or via the EFTs. For that, there will be no limit, so you can transact as much as you can. And two, the financial service providers will have the prerogative to set even lower limits, depending on
it's at their discretion.
It's at their discretion, depending on the customer profile, depending on the ongoing due diligence that they do about the customers, and basically the transaction history of the customer. So the limits could be lower depending on the risk profile of a customer. But remember, this is about over-the-counter cash withdrawals.
Yes.
Digital channels remain open.
Remain open.
Absolutely.
Okay.
Yeah.
Okay. So, well, that's interesting. This trend of ours of reducing these limits makes it seem like in the next 10 years. We won't be using checks anymore because the trajectory is looking warning. But
it is quite possible. It is quite possible. That's what we've seen. I cited some jurisdictions earlier, Namibia, Botswana. The gradual reduction. At a certain point, you get to a point and ask yourselves, do we still need them?
Still need them. And hopefully cash as well. Maybe I'm predictable. I know people who always say because they don't have the discipline, they try to avoid the digital channels, but I think we'll talk about that later. What I wanted to ask you, Andrew, also is that I think there's a time when so what Ugandans know is that Bank of Uganda regulates, supervises, licenses commercial banks. That's what we are known for, and maybe micro deposit taking and credit institutions. I would like you to share with the public what necessitated us to start regulating mobile money operators and fintechs probably. And when it comes to protection, what does that mean for the public?
Thank you, Pumla. The central bank started overseeing mobile money operators, or broadly payments service providers in 2020.
Okay.
And that came with the enactment of the National Payment Systems Act.
Okay.
These entities have been very, very critical in the financial inclusion story. Yeah. Today, as we speak, 36.7 million wallets are active in the mobile money ecosystem. 36.7 million wallets.
36.7 million wallets.
Million wallets.
In Uganda, we are 50 million.
Yes, about 50, just under 50, maybe 47, 48. Yes. Yeah. So, but the active wallets are 36.7. Yeah. Now, those wallets are held by 17 million Ugandans. Unique individuals, 17 million. Now, that represents about 65% of the adult Ugandan population. Yes. So this is telling you about the popularity of mobile money and related payment channels. Now, I want you also to remember the statistic I gave, the number, the transaction volume and value. Yes. In a year, we're talking about more than 390 trillion shillings being processed on mobile money. That means that there is so much popularity, there is so much use of these systems to the extent that if something went wrong, then the public would be at a disadvantage. Yes. We're paying school fees, we're paying for groceries, people are ordering food, people are paying for electricity, utilities, power, water, fuel. It is almost a critical infrastructure for the country. So the central bank would not sit aside. Of course, even before the National Payment Systems Act came into place, there was a regulatory collaboration with the Uganda Communications Commission, through which those entities were overseen. But the criticality of the payments infrastructure necessitated central bank oversight. Okay. You imagine, Pumla, you pay for cable TV. Yes. Imagine that hot game you want to watch, that movie you've always wanted to watch, and your power runs out, and you can't pay, or you can't subscribe to your cable TV or Netflix or whatever. So the inconvenience that comes with that would disadvantage the public, and it would undermine trust in the broader financial ecosystem. Okay. So the central bank came in to supervise these entities, and as we speak today, we have about 56 licensed players in this space. Many of them are not customer facing. Okay. Many of them are in the background.
Okay, what does this mean?
This means that if I were to pay for groceries online, there is an entity that is connecting my mobile wallet to the merchant. Okay. There is an entity that is connecting my wallet to the person from whom I'm buying the goods. Okay. Now, many of them are not customer facing, but they're doing a critical job. Pumla. In the year, I like numbers. Yeah. In the year to March, about 70 trillion was processed by those kind of entities. The ones that are linking customers to merchants. Okay.
So you may be saying worth 56, and then the Ugandan is saying, as we only know like 5, because those are like the more public, interactive facing. Yes, but then in the background,
there are many others.
There are many. You go to a supermarket, do a transaction, it's someone in the background. That's part of the 70 million you speak about. Oh, exactly. Okay.
So the point I'm making is that these players have turned out to be very critical in the digital transformation agenda. They've turned out to be very critical when it comes to enabling access to financial services, especially for people who may not be able to open a bank account. Okay. Some of these people are in the peri-urban areas, in the rural communities, all they have is a feature phone. Now, with your feature phone, with your smartphone, if you do have one, you can comfortably participate in the formal financial space.
Okay.
And that means you can engage in productive economic activity,
Okay.
and you can get yourself out of poverty.
Yes. Actually,
So,
yes. That, and
in
I think
closure,
that is for us our at the end of our mandate. We always talk about for socio-economic transformation, and
Yeah.
that's a key element
It is
in
a key
giving
element.
people access to financial services, which can help them get out of that hold of poverty.
Absolutely. So in a nutshell, these digital payment channels have turned out to be critical enablers for financial services delivery, for economic activity, and they warrant regulatory attention to ensure that they adequately mitigate risks, to ensure that they don't pose challenges to the broader financial sector. That's why we oversee them.
Okay, okay, that clears that up a lot, because I feel like we jumped from UCC to BOU, and people kept asking what happened, why couldn't UCC do that? It is clear that we all know innovation moves faster than regulation. So BOU has a regulatory sandbox for payment innovations. Can you, in simple terms, explain to us, let us know, what is this, who is it for, and why does it matter?
A regulatory sandbox is, and I'll use, let me go literal.
Okay.
Sandbox.
Sandbox.
A box of sand. Think about a box of sand
Okay.
in which a child is molding simple
Yes.
structures, maybe on the beach or on the lakeside.
Yes. Sand castle.
Sand castles and all
Yes.
sorts of things.
Yes.
That is, in literal terms, what a sandbox is. Now, from a regulatory point of view, we're getting that similar setup and bringing it into a formalized regulatory environment.
Okay.
So the sandbox is an experimentation framework in which a solution provider, a private player, will work with a central bank to experiment about something. That experimentation can be about a product, it can be about a payment solution, it can be about a technology which will support or which will develop our payments ecosystem.
Yes.
So the sandbox is a framework in which innovations are tested under regulatory oversight and within limited boundaries.
Okay.
Yes.
So,
Why was this brought on board? This is part of the central bank's effort to promote digital innovation, especially in the payment space. We realized that there are so many innovators out there who have good ideas, who have good solutions, but some of those solutions may not necessarily be provided for in terms of the current regulatory environment.
Okay.
So under this regulatory sandbox, we're able to sit with the innovators, test their products, learn together,
Okay.
look at areas where we need to refine our regulatory framework, and if the tests are successful, we pick the lessons.
Okay.
The lessons could be amend the regulatory framework, strengthen here and there, or it could say this doesn't work for the Ugandan market.
Or not yet.
Or not yet
Yes.
ready for the Ugandan market.
Okay.
So those are the kind of lessons we pick from the regulatory sandbox.
Okay.
Yeah.
Okay. So does an individual, what are the steps that someone takes? Do they just come, ask for the director, national payment systems?
No,
Is
in
it
the
corporate? Is it an individial who comes? Like, what is that process for somebody who feels, I have this idea and I've built something and I want to test it? How would they come?
Yeah.
Okay.
So if you do have such an innovation, then reach out to us. You can send an email to the fintech office at bou.or.ug or npsd@bou.or.ug, or visit the central bank website.
You talked about safety. You talked about leaving your electronic footprint or something. Are there any other benefits maybe you want to talk about before we move to risks?
Convenience, probably. I don't know, they
Convenience, of
spoke
course,
about convenience.
of course,
Yeah,
yes.
convenience, flexibility, and the digital footprint. Those
digital
are
footprint.
okay. Those are some of the core benefits
Okay.
of digital payments.
Okay, so because I know that there's people who are still worried. The more we move money online, the concerns about fraud, you talked about fraud earlier, scams, about systems not working as they should, they grow. They're growing. The more we move our money online. So the question is, maybe you can share with the public first what the risks are that they should be aware of, and maybe how they can take individual responsibility to cover those risks, and what BOU is doing also to promote the safety of these systems so that people are less fearful. Yeah.
Yes, indeed, you're right, Pumla. Digital payments come with some risks, and you know, the users have to really be aware of them. Most risks rotate around protecting personal information. The moment you lose control of your personal details, then you have created a vulnerability that the digital fraudsters, that the cyber actors can exploit to gain access into your financial details.
Yes.
So things like, and it starts with basics, by the way. Having a smartphone with an app, for instance, is good. But if that phone is not password protected, then you have exposed yourself. Even when you have a bank app password, you are already exposed. Because the first point of entry is the basic phone password, the basic gadget, right? So taking care of the gadgets is key. Taking care of the pins. People do share pins. Okay? People do share pins, and you never know when the person who knows that pin is actually going to compromise it. We've had cases of people sending relatives to mobile money agent points with phones to withdraw money on their behalf. Those are practices that we do not encourage, because the person you've given the pin to might abuse that pin when you least expect. So we encourage the public to take care of their personal details. We have scammers who take advantage of people. They call you and tell you lies. I'm calling you from, for instance, they could say that they're calling from my service provider. They could say they're calling from the central bank. Maybe they're calling from the Communications Commission, and they're asking you to do certain things. Never listen to those stories.
Never.
Because they play with the psyche of the human mind. And before you know it, you have shared confidential details. All right? So please be careful with people who call you advising you to either reset pins, or people who call you to say that you have won certain things. How do you win something if you didn't participate in a campaign?
If it's too good, if it sounds too good to be true, then it's usually too good to be true.
So if you've not participated in a campaign, don't expect anything that you've won. If you've, if somebody is asking you to send some money so that you claim a prize, you have to be very, very cautious before you respond to such people. So the message really is for the public to, first of all, protect personal information, protect that information jealously. Do not share pins, protect your phones with passwords. And when you lose a phone, notify the service provider. If you lose a gadget, a tablet that has your banking credentials, notify the service provider. Don't save passwords on phones. People save passwords on phones, and can you imagine you save a password on the phone, and maybe the phone is not password protected. So you are completely exposed in the event that you lose the gadget. So those are some of the key things we urge the public to do. But on the other side, as a regulator, we also have initiatives we're taking on board. Some are being handled together with the licensed entities. For example, when it comes to digital fraud and cyber threats, we've worked with the Uganda Bankers Association and the Payment Service Providers Association to set up an information sharing platform. It's called the Anti-Fraud Consortium. This avenue has created room for threat intelligence sharing, so that the players don't, rather the threat actors don't hit one after the other. So through information sharing, we have a joint effort that has supported threat intelligence and protected some of the players. We are working on cybersecurity matters with the sector We've issued guidelines. We've stepped up the oversight of the regulatory expectations for the entities. And we're doing a lot of public awareness. I think a lot of it actually is on public awareness. Especially for the last mile consumers. We need to understand the risks that we face, and we must, guard our information jealously.
They collected information from financial institutions and realized that most of this theft, when it comes to the level of just a PIN, was done by people that people actually knew. So if there are cameras at an ATM and someone would say, no, I had my ATM, I had my phone, I had my... And then they realized, and they gave that person their password. And what shocked me the most is, even your spouse can be the one to do it.
It is very possible.
Yeah, so when you said guard jealously, I respect that guard jealously. So we want to wrap up, Andrew. Finally, what would you say the future of Uganda's payments looks like? And maybe one quick message to that individual there who is watching and still hesitant to go the digital route.
Thank you, Pumla. I think the future of payments, the future of finance, even more broadly, is digital. There is no doubt about that. Cash will remain, but cash, I think, will reduce in importance in the coming years. In terms of payments, more specifically, the future is undoubtedly digital.
Yes.
We're going to see a lot more innovation. We're already seeing it, by the way.
Yes.
We've not talked about things like, cryptocurrency.
Yes.
We've not talked about things like stable coins.
Yes.
We've not talked about central bank digital currency. So when I say that the future of payments is digital, I think it is indeed going to be a digital future.
Yeah.
In many jurisdictions, central banks have explored, and in a few of them even gone live with central bank digital currencies,
Yes.
which is another level of innovation or evolution in the digital payment space. And as far as Uganda is concerned, I think we're going to see a lot more people continue to use the digital channels. We're going to see many more businesses accept digital payments. We're working on a number of infrastructure initiatives to deal with some of the teething problems that remain, things such as interoperability across the financial sector. We're trying to address some issues around charges. We are in constant engagement with the players to address pains around transaction fees, which remain one of the barriers to adoption. And of course, with these new measures that the central bank will be rolling out, to cap interbank checks, to cap over-the-counter withdrawals, I can confidently say that the future of payments is digital. The future of the financial sector is digital.
Yeah.
And this is a journey that every member of the public out there needs to be part of.
Okay.
Yeah.
Me, I usually think I know, but every time I have a guest on the podcast, I learn even more. So I know that is the same benefit that our audiences have also been accorded. Thank you so much.
It's been a pleasure.
Yes.
Thank you.
And Ugandans, as this shift continues, the bigger part here, let's stay informed, let's stay alert, and bigger also is that there are opportunities that come with digital transformations and innovations. So keep your ears open, keep your eyes open so that you can take advantage of the opportunities that this comes with. So if you have found this episode helpful, please remember to like, share, and leave us a comment in the comment section. And also don't forget to subscribe to the Bank of Uganda YouTube channel and follow us on all our socials if you would like more engaging and insightful conversations such as this. Until the next time that BOU Connects, bye.